Hello! Today I'm going to be doing another part in my eToro ESG Portfolio series. So this is where I pick a stock that I think meets my own morals around environmental, social and governance issues. And I am building that portfolio on the eToro platform using one of their general investment accounts. So today I'm going to talk through my latest pick and give you a bit of a recap on what's happened so far. So welcome to the Looking After Your Pennies YouTube channel. My name is Charlotte Jessup and I am passionate about financial education presented in an easy to understand way. Part of my channel is about sharing with you my journey as I learn new things and then pass them on to you. I like talking about everything from budgeting to investing and pensions. So if those are things that you're interested in, then you're in the right place. So before I start, I just want to do a quick disclaimer. This is for entertainment purposes only. It's financial education. It is not financial advice. I do not recommend that you copy me. It's just here for you so that you can learn about maybe how you can go and find things that you might want to invest in that suit you. It is investing, so make sure that you are aware of the risks. Your money can go down as well as up, so you need to be aware of that. So what am I going to talk about today? Well, firstly, I'm going to give you a recap of what has happened so far with this ESG portfolio building that I've been doing. Then I'm going to check in with my current portfolio. We're going to see how that's doing, see if there's been any movement, ups or downs, and just, see if there's any changes that I want to make. The next thing is I'm going to share with you my stock pick for this month, week. I kind of do these irregularly, so it just happens when it happens. So we're going to do the latest stock pick in this portfolio, and I'm going to share that with you and my reasons why I've chosen that. Now, the final thing I'm going to talk about is relating to the stock that I am picking today, and this is to do with stock splits. So I'll get to that at the end and just explain a little more about what that means. So let's jump in and do a recap on what's happened in this series so far. Now, if you're new to this series, then you might not understand my motivations that are going on here. And if you are, then just hold tight and I will whiz through this bit so we can get to the nitty-gritties of what I picked next. So I started this video series for two reasons. The first one was I wanted to try my hand at a bit of stock picking. This is not the majority of my portfolio, okay? So I am not doing this as part of my main strategy for investing. I'm very much a passive investor. So I have, automated payments that go into stocks and shares ISA, and then that goes into index funds. That's my main strategy. But I wanted to learn more about stock picking. I wanted to get to know some of these companies a little bit better. The other purpose for this was to actually look at some of the ESG credentials of these companies that are being included in these funds that say they're ethical in some way. So it's about getting to know some of these companies and some of the criteria that are necessary to make them a good ESG company. And it's all about sharing that. Like I say, this is a journey for me too. So I'm very keen to bring you along for the ride. I will show you the things that I look at, the kind of judgments that I make, and the metrics that I'm checking before I make this decision. Now, this is very much a long-term venture for me. So I am doing this and I'm probably going to hold these stocks for a while. Now, I'm also quite new to this. So a lot of this is going to be guided more by gut and instinct and I guess more broadly available information. I'm not in the world of trading and things like that, so I'm not closely analysing charts. I'm just going to do a bit of a general sweep on these companies, check that they are ethical, look at some of the things that they are involved in, see if there's any red flags that come up, and then make a decision on whether or not they get included from there. So that's it, and I'm doing this all through the eToro platform. It's an app, it's also on desktop, it has lots of tools and features, and it was an account that I wasn't using for any other investments at the time that I started this series. So everything that's on there is just this portfolio, this ESG portfolio that I'm building as part of this series, which makes it nice and simple. They also have some great features, so there's fee-free trading, they have a good range of stocks available, so that makes it easy for me when I'm picking something. I don't have to go and check that it's available. I'm pretty certain when it comes to eToro that it's going to be there. So let's have a little look at what's been going on with my portfolio currently. There have been 2 previous videos in this series, and in the first one I kind of gave the lowdown on the video, and then I made my first stock pick, and this was Adobe. So this is a tech company, and they are specialised in, you've probably seen some of the software they use. I use a lot of their software in my business, so it felt right for me to pick something that I knew and I sort of understood. And I looked at their track record, and they've had a pretty good year. I think most people have been at home using lots of these tools online, so they've been doing pretty well. In addition to that, they also had a really good ESG score, and they had an ESG score of 11, so it's kind of like the lower the better. So that ticked the boxes for me. So checking up on this now, so I bought this stock on I think the 28th of April, and so far I've made a tidy profit of $8.81, which is not bad on my initial $50 investment. So yeah, this is an increase of like 17.61%, which is a really good return in a short period of time. So I'm really happy with what's been going on with Adobe. Now I understand that there may be sort of like dips that happen, but in the future, but for now that one is proving to be pretty strong. So I'm really happy with what's gone on there. The next company that I went for was actually, it was a branch of Coca-Cola. So they're a separate company. They're actually the European bottling agency company, whatever it is, that's based in Europe. So they bottle Coca-Cola products in the European areas, and I assume distribute them as well. They're also heavily involved in the recycling process and making sure that they use recyclable materials sustainably. So this was a real draw with this company. So when I check in with these, I bought this investment on the 17th of June, so it's about a month ago, and actually they've taken a little bit of a dip, so they're down by about 2% at the moment. So I've lost 97 cents on that investment. Again, a $50 initial investment, so not the best, and I'm sure it will sort itself out. Again, I'm looking at the long term. I'm not going to be crying about like $1, like 60p or whatever it is, 60, 70p. So I'm more than happy to hold on to that investment and keep that one going. So overall, with the $100 that I put into the stock so far, I'm about $8 up, so about £6 up altogether, which isn't too bad. It's better than if it was sat in the bank in my savings account. So I'm fairly happy with the choices that I've made. Like I said, most of my motivation here is around making sure that these companies are ethical, they're doing good things in the planet, but also there is a motivation to actually want to make some money from this. So what is my stock pick for this week? Considering that Adobe was doing really well, I thought that maybe I would go back to picking tech companies. This is obviously, it's a popular industry. We're moving more and more towards working from home. So actually the rise of technology is probably going to be a long-term sustainable trend. Also, these companies can have really low ESG scores. This is because they're not necessarily involved in producing products that they need to be recycled. There's not sort of huge amounts of pollution. Some of them, this is where Adobe does particularly well because it's kind of digital software. So there's a really low resource intake to actually produce those products. So with that in mind, I kind of thought I'd look a bit more into the tech side of things. I kind of wanted to try and diversify more my portfolio, and I talked about a little bit about that in the last video. But today I thought, I'm just going to go with what feels right. So that's what led me to Nvidia. So Nvidia are they make PC components. Don't quiz me on this. I don't know a huge amount about what they do, but they are a company that I've heard of. I know they make graphics cards, amongst other things, and they're well known in the kind of video imaging hardware world, I suppose. Now, the first thing I always do when I find a company is I head over to Yahoo Finance and I click on the sustainability button. If I see anything there that sort of scares me, I immediately back off. But this one had a low score, so this was 13. So for comparison, Adobe was 11. So we're in that same sort of region. Not quite as good, but generally okay. The next thing I do is I normally have a little scroll down to see what sort of areas they're involved in. So again, under that sustainability tab, on the right hand side, if you scroll down, it lists kind of all these red flag areas, and you can check to see if they are actually involved in these. Again, because this is tech, they're not involved in things like animal testing and tobacco, firearms, stuff like that. I mean, they could be in another branch of the company, but it's a real draw of this particular sector that, they're not typically involved in these sorts of things. So a quick scroll through this page of Yahoo Finance for NVIDIA shows me that there's no warnings there, nothing that would bother me, and nothing there at all, to be honest. So I always look for things that align with my model. So if there's had been something there, I would think very carefully about whether that's something that I feel okay about. There are some big no-go areas for me, and this will probably be different for you, so you need to think about that carefully. So once I've checked out the ethical and sustainability credentials, I know we head over and look at the kind of monetary side of things. Now, like I say, I'm not looking at nitty-gritties. I'm not going to be analysing things and getting too deep into this. What I'm looking for is general trends. So I will go and I'll have a little look and see if, they're generally on the up. Now, obviously, this doesn't mean that they're necessarily going to continue being on the up, but because I'm investing long term, I'm not too worried if there's a dip in the future, because I'll probably just sit that out and see what happens. So there's no real big deal for me there if they're on a bit of a dip. What I want to see is that they've had some growth in the past, and it looks like that may continue in the future. Another step that I've started doing this time around is to kind of do a quick news search, see what things are being said. And actually this led to me finding out something quite interesting about NVIDIA. And this is that they are coming up to a stock split. So let me tell you a little bit more about stock splitting. So as companies get bigger, they normally find that the price of their stock has got really high. So there is an example of, say, Walmart, who has split their stock 11 times in their history. So as companies get bigger and the value of the stock increases, then they split the stock into 2, 3, or even 4. So NVIDIA is going for a 4-for-1 split. So what this means is if you hold one NVIDIA stock, what you're going to get past that stock split day, which I think is the 20th of July, is you are going to get 4 stocks in exchange. Now, it doesn't change the value of the company. It just means, the people that had 10 stocks before now have 40. So there's no inherent, increase in value or decrease in value as a result of this. The main reason that it's done is to produce a bit more liquidity in the market. So essentially this means it makes it easier for people to trade. Whereas before it might have been more expensive to get that one stock, now it's much cheaper because it's now a quarter of the price to get one stock. You still own, you'll own a lesser share of the company, but it's easy to buy that one stock, which makes it easier to trade, and that makes it more valuable, more desirable for the company. You can also get a bit more interest from people, I guess a renewed interest. So the spotlight shines on that company for a bit, which can attract new investors in. So I guess, I was searching in the news and I saw this about NVIDIA, and I was kind of interested in that. And that's, another level that made me think, oh yeah, I'll see what happens with this. And there will be other investors that are doing this too. So now I'm going to go ahead and I'm going to make that investment. So it's going to be another $50 invested into NVIDIA through the eToro app. So as you can see, I type that in, it takes me to the page, I click trade, check that it's the right amount, and check that the little box says that I'm purchasing the underlying asset, because I don't want to do CFDs, I just want to buy the actual stock. Now currently the market is closed in America, so I'm just going to have to wait until that comes through. As you can see, if I head over to my portfolio, I can see that it is pending there. It's waiting for the market to open, and then that order will go ahead. So there we go. That is the next step in my eToro ESG portfolio. And I hope that you found it interesting today. Again, a slightly different angle to look at here with the whole NVIDIA and the stock splitting. But again, another company that seems to be doing okay, and they're not doing anything too bad for the planet as well. So they can earn their place in my portfolio. I will be keeping an eye on these companies, and I will be checking in on them again probably in another month or so, and picking another company. So I would love it if you could come back and join me for the next installment of this series. You can do that by hitting the like and then clicking the subscribe and making sure that you get those notifications from me when the next video comes out. If you can't wait till next month, then make sure you go back and check a whole load of my other videos that I have here on my YouTube channel. If you want to learn more about investing, then may I recommend my financial education community. This is called the Money Nook. You pay an amount each month and you will get access to workshops, courses, including one for beginner investors, a community, live Q&As, and group coaching. I introduce a new workshop into the group every month, so the amount of content that is within that membership is constantly growing. If you want to find out more about that so that you can extend your investing education, then make sure that you take a look at the link that's in the description. Big thank you for watching this video. I hope to catch you in the next one. Bye.